Macro traders, here we are. I'm Domenico and I bring you my institutional vision on global markets. Get ready because today we are analyzing the global currency reset, the dollar's decline, and the rise of gold and Bitcoin. Welcome back, truth seekers. Today we're diving deep into the biggest financial story of our lifetime, the managed decline of the US dollar as the world's dominant reserve currency. Is the dollar about to collapse? Not quite, but the world is shifting and fast. Gold is roaring back, Bitcoin is surging, and the US is playing a high stakes game to stay on top. Buckle up, because this is going to be a wild ride through geopolitics, economics, and the future of money. Let's break it down. Let's start with the root of the problem, Triffin's dilemma. Back in 1971, when the US ditched the gold standard, the dollar became the world's reserve currency. But here's the catch. To keep the global economy humming, the US has to pump out dollars by running persistent deficits. More dollars means more liquidity for global trade, but those deficits are killing America's industrial base, eroding national security and shaking confidence in the US dollar itself. It's a paradox. The dollar's strength is its weakness. Think about it, guys. Every US dollar printed to fuel global trade hollows out US factories. We saw this during COVID and Russia-Ukraine conflict. Supply chains collapsed, and the US couldn't even produce enough weapons or medical supplies. That's a national security crisis. A country that can't build its own tanks or masks can't claim to be a superpower forever. This isn't about economics, guys. It's about survival. The US military depends on foreign supply chains, especially from China, for rare earth metals and critical components. Imagine a world where America can't arm itself because it outsources its factories. That's a real threat to US dollar reserve status. Not just inflation, but the loss of sovereignty. The Trump administration and other leaders see this and are pushing to reshore manufacturing by deliberately weakening the US dollar. A cheaper US dollar makes US goods more competitive again, bringing factories back home to the US. But here's the kicker. Weakening the US dollar means walking a tightrope. Too fast, and you risk inflation and chaos breaking out. Too slow, and you lose the industrial edge. This is why the US is orchestrating a managed decline of the US dollar, not a collapse, but a strategic retreat to rebuild strength. Now let's talk about gold. For over decades, central banks worldwide have been dumping US treasuries, as we can see on the graph, and stockpiling gold like never before. But why? Because gold is the ultimate neutral reserve asset. It's not tied to any government's debt or deficit. And who's leading the charge? China. They're pairing their massive gold reserves with a digital yuan to de-dollarize global trade, especially for oil and commodities. Imagine a world where Saudi Arabia accepts yuan-backed gold instead of dollars. That's a game changer. China's strategy is clear. Reduce reliance on the US dollar by making the yuan a trusted currency for trade. Gold gives it a credibility, and they're not alone. India, Russia, and others are following suit. This shift is a historic pivot, signaling the end of the dollar's unchallenged reign as a world store of value, as BRICS is making a run for it. But guys, the US isn't sitting still. Enter Bitcoin and stablecoins. The new kid on the block, the US is leaning into its technological edge against BRICS, promoting Bitcoin and stablecoins like Tether, backed by treasury bills, to keep the dollar dominant in the global payment system and as unit of account. Think about it, guys. Bitcoin's market cap is exploding, and stablecoins are the backbone of digital finance. Together, they're a one-two punch to maintain US influence in a world moving away from a dollar-based system. Here's the genius part. By embracing Bitcoin and stablecoins, the US is creating a parallel financial system that competes with China's gold-backed yuan. Stablecoins keep demand for US treasuries high, while Bitcoin's fixed supply makes it a hedge against inflation. It's a bold move to stay ahead in a global monetary chess game. So what's the future, guys? A world where gold and Bitcoin compete to be the ultimate store of value, but here's a catch. They can't coexist equally without a geopolitical iron curtain. Gresham Law tells us one will dominate. Will it be gold backed by China's commodity empire or Bitcoin fueled by US tech and financial innovation? This isn't just about money, it's about power, trade, and who controls the global economy. Bitcoin's volatility is a hurdle, no doubt, and quantum computing could pose its risks to its cryptography, though it threatens fiat systems even more. But gold, it's tangible, trusted, and timeless. The US and China are picking sides, and the world will follow. Investors, take note. Self-custody is key. Hold your own Bitcoin keys, own physical gold, paper gold, or custodial Bitcoin. That's just asking for trouble in a crisis. Remember that. Now, guys, let's talk about a wild card, gold revaluation. The US holds over 8,000 tons of gold, officially valued at a measly $42 per ounce. But the market price today around 3,400 US an ounce. If the Treasury valued its gold to market rates, it could inject hundreds of billions, or roughly 900 billion, into its balance sheet if it's marked to market to current prices, slashing borrowing costs and easing the burden of skyrocketing debt. But it only helps so much. It won't help so much because the debt's at 37 trillion right now. With interest expenses eating up the budget, this could be a fiscal game changer in the short term, definitely. But if they're going to revalue it, in my opinion, it's going to be valued far much higher than what the current market prices are. Some policy makers are whispering about this already. It's not just about money, it's about restoring confidence in the US dollar while giving the US room to rebuild its industrial base. That's the key. A revalued gold reserve could be the secret weapon to navigate this transitional rebuilding of the US industrial base. But there's a bigger force at play, artificial intelligence. AI is disrupting everything, especially jobs. In the last month, LLM models have been accelerating at gold speed. Healthcare, trucking, even white-collar sectors are facing automation. What happens, guys, when millions lose jobs? And they will. Defaults on the rise, loans, mortgages, and credit cards. The debt-based monetary system could buckle under the strain, forcing more money printing. Oh, that money printing is coming. The big print is coming. And mass defaults. That's where gold and Bitcoin shine. Safe havens in a world of uncertainty. This tech-driven chaos is accelerating the monetary reset faster than you can blink. Gold and Bitcoin aren't just investments. They're insurance against the system on the brink. And with the dollar weakening, forecasts are bold. Gold could hit $3,800 and Bitcoin might soar to over 200,000 in the next 6 or 12 months. That's not hype. That's just market pricing in a new reality. So guys, what does the future hold? A multipolar monetary system where gold, Bitcoin, and digital currencies coexist. The US wants to reshore industry. China wants to boost consumption. And the world needs stability. Despite tensions, global cooperation is inevitable. No one wants a collapse. Instead, we're heading towards a realignment, a system where neutral assets like gold and Bitcoin balance power and prevent the pitfalls of the dollar's debt-driven dominance. This, guys, isn't the end of the US dollar. It's the end of the monopoly. The US is playing a long game using technology, Bitcoin, and stablecoins to stay ahead, while gold anchors trust. For investors, the message is clear. Diversify, hold hard assets, and prepare for a weaker US dollar, as that's inevitable over the next 3 years as the US rebuilds its industrial might. We, guys, are living through a once-in-a-century shift. The US dollar's decline isn't a crisis, it's a transformation. Gold and Bitcoin and innovative technology are stepping up as the new neutral reserve assets, but also as a store of value. And the US is fighting to stay up on top with innovation and strategy. For you, the investor, this is a chance to get ahead of the cold curve. Own gold, hold Bitcoin, hold innovative technology, and stay vigilant. The future of money is here, and it's up to you to secure your place in it. What do you think? Are you team gold, team Bitcoin, or both? Drop your thoughts in the comments. Let me know what you're invested in as a store of value. Smash that like button and subscribe for more deep dives into the future of finance. Until next time, stay smart, stay sovereign, and I'll see you in the next video. Bye for now.